Hello and welcome to LRG Wealth Advisors Weekly Market Trends. I'm LaRue Gibson, Managing Director at LRG Wealth Advisors. Understanding market trends is essential to making informed decisions in today's dynamic environment. Let's begin with a quick refresher on the basics, moving averages. These are fundamental tools in stock charting that help smooth out price data over time, providing a clearer picture of a stock's overall direction by averaging past prices into a single continuous line. There are two key types of moving averages you'll encounter. The simple moving average, or SMA, is calculated by adding the closing prices of a stock over a defined period and dividing by the number of periods. Each day within that period carries the same weight. For example, a 10-day SMA gives a daily, updated view of short-term price momentum. On the other hand, the exponential moving average, or EMA, gives greater weight to more recent prices. Because of this, the EMA reacts more quickly to price changes, making it especially valuable for tracking current momentum while still smoothing out random short-term fluctuations. At LRG Wealth Advisors, we believe understanding the trend of major markets keeps investors on the correct side of uptrends and downtrends. We track ongoing trends and focus on recognizing two specific, important signals, the golden cross and the death cross. But what do these terms mean? A golden cross, which signals an uptrend, happens when the 13-week moving average rises above the 52-week moving average. This crossover marks the start of an uptrend, and as long as the 13-week remains higher, it suggests upward momentum may be gaining strength and could confirm a long-term rally. On the flip side, a death cross signals a downtrend. It's triggered when the 13-week moving average drops below the 52-week moving average. This often suggests downside momentum is building and may indicate a developing long-term downtrend. It's vital to note that these patterns don't provide buy or sell signals. They confirm trends rather than predict them, because moving averages naturally lag behind real-time price movements. To better capture market changes, we rely on exponential moving averages, which increase the sensitivity of these cross signals. Our approach uses these indicators to help us avoid aggressive investing in downtrending markets or being overly cautious when markets are trending higher. You've probably heard it before. The trend is your friend until it ends. This guiding principle reminds us to stay aligned with what the data shows, not just gut convictions. Now let's look at the current trend status for major benchmarks. The S&P 500 remains in an uptrend with its golden cross confirmed back in April last year. The Nasdaq Composite and Russell 2000 continued their uptrends, both having reached golden crosses earlier this summer. Internationally, the MSCI EFAE and MSCI Emerging Markets Index both hold uptrend status as well. For this week, there were no new golden or death cross signals among major benchmarks. By acknowledging these ongoing trends and identifying changes when they occur, investors can better understand where major benchmarks stand today and where fresh opportunities or emerging risks may arise in the near future. As always, we invite your thoughts, comments, and questions. Take good care. Want to know more about how we can help you live the life you imagine? Contact LRG Wealth Advisors and subscribe to our newsletter. LaRue Gibson, LRG Wealth Advisors.